Good afternoon, guys. Ken at Tortoise Capital Nightly Strategy Podcast for April 8th, 2024. We'll start with the hybrid swing portfolio. So we're looking at 30-minute charts. This is Alcoa. So today we tried like a 1, 2, 3 entry. It rolled over. I was late getting out. Took -1. AI, basically the same trade, also a -1. Caterpillar got short on the weakness in materials and in the industrials when that rolled over and broke through the PSAR, took a standard risk, and this thing just collapsed all the way back to the 5-day anchored VWAP. And I didn't want any overnight risk, so we took that one, and that earned 3R. Cliff earned an R on a 1, 2, 3. Little recovery off the low of the RL10 reversal here. CVS, no trade. Diamonds, no trade, very narrow range. No trade in Disney. Devon Energy picked up 2R after a COTA 2 continuation. Emerging markets scratched. Ethereum, big trade of the day. This was a great big gap up. Great big gap up after a COTA 2. So it gapped to here, reversed. I took that like a 1, 2, 3 entry intraday there. Standard risk. And that did nothing. This was like about an 8% gap. And then it had another 8% payoff intraday. So that was quite a recovery. Now, the upside of this is around 34. So there's another $7 of upside potential on that one. So that's going to be a high priority for me tomorrow to pile on. And we're holding about 4R of cushion. Scratched in Mexico, picked up about 3R on the gap up and continuation in Brazil. No overnight risk. Home Depot, I like the recovery. If this continues tomorrow above today's high, that'll start my first position in Home Depot. Intel, no trade. The slide in tech continues. IP, collapsing dragon, picked up an R. It was about 2R in hand and then reversed, and this was a profit preservation of 1R. And then it basically droned sideways. Real estate was a COTA 2 continuation in the usual way for an R. Coke, no trade. Regional banks, COTA 2 continuation for 2R. This is a natural exit because it's started to stall right where it stalled and fell the last 2 times. So it feels like the channel is between 47.75 and 49.25. And that took a nice bite out of the middle of that. I like that one. McDonald's, no trade. 3M, no trade. Merck had a collapsing dragon for about an R. That was an orderly sell-off. I tried the COTA 2 continuation in Microsoft, but tech just did not follow through today, and I ended up scratching. There was a continuation short that I missed, but there you are. Marijuana was a 1, 2, 3 COTA 2, which failed for an R. Nike scratched. NVIDIA scratched. A lot of sideways chop today. PBW, the clean energy, had a half an R gain. It never really followed through beyond the 30-day anchored VWAP and the 5-day. So this feels like sort of a natural price for it. Rivian, I tried the 1, 2, 3 crossing of the Bollinger Band mean with a nice wide stop all the way down to the PSAR. That's scratched. After the reversal, that's a 1, 2, 3 re-entry, and that gave a fractional gain. Just wasn't much interest in it, but I do like it as establishing some upward bias for tomorrow, because if it can hold here around $10, then a continuation tomorrow should be interesting. SOUN, I thought about the 1, 2, 3 entry, regretted not taking it. S&P was really tightly sideways today, as were treasuries. Tesla was a gap up, caught a 2 for about a little over an hour, and exiting in the usual way after the R10 rolls over, taking it at the skin of the dragon. Gave it every opportunity to follow through. It really didn't. Walmart is continuing its tortured grind upwards. I'll be ready for a continuation tomorrow, but today was a little better than a scratch. U.S. Steel, the collapse after last week's nice run up, gave me about an R on the downside. Didn't want any part of that overnight though. And then XLI was -1, failure to follow through, and I had a pretty tight stop, so that lost 1 R pretty quickly. So there was some hooking and jabbing today. Just before we get to the sniper trade of the day, Luke checked in with an update on his intraday system. He's getting coded up for his robot. He's got a 40% win rate, 60% loss rate. So it wins 2, loses 3. The average win is 2.1. Average loss is 0.83. So that's like that's a 2.5 to 1. So it gives you a 4.5 to 3 or a 3 to 2 payoff, and lots of trading opportunities in an automatic system, and there's very tight risk management and the possibility of big gains. So we're liking the way that this thing works pretty nice. It's getting close to becoming a production system. Let's see. Oh, here's today's sniper trade of the day. So this is in ETHE again. This was an opportunity trade later in the day. So there was a gap up and it pulled back and then gave us a Kata 2 style entry. And when it crosses the descending VWAP or PSAR and crosses the VWAP, which is right here, I take my standard entry long with a standard exit at the PSAR flip, and that works pretty well. I thought about this one as an exit and re-entry. I gave it a little bit more room because this was so orderly, and it was already up 12% from yesterday's close. So I felt like there was a lot of buying pressure in this. So I stuck around. It came out of the chop, broke higher, and took the second position, and then exited before the close. And the first position earns 1, 2, 3, 4, 5. Second position earns 1, 2, 3. So that's an additional +8 on the intraday on the 3-minute sniper on ETHE to go with the 4 that it earned as a swing, as the hybrid swing. Taking a look at the traders today. George got caught in the chop in McDonald's, not much of a mover there, for -1.6. That's within his norms. In previous days, the McDonald's has been very directional, but now this is 2 days of pretty tight chop, And now as I take a look at this, this is becoming a critical state for here, because you have it getting ready to cross the Bollinger Band main. But also if it breaks below this double bottom in the R10, that's one where I think you could go short or long out of this critical state. So I would stay with that one. My bias would be towards the long side, because today did not sell off much in the S&P, and this is a chance to buy McDonald's on sale. So I would be I'd be surprised if there's no buying interest in McDonald's here in the near future. This is Jonathan with EWW. He's been concentrating in his small coaching program with me on mastering the trade on a single symbol, and we're choosing EWW because it has ideal characteristics for an intraday only trading vehicle. And he gets the large gap up and the rollover and sell off here. That's the OR3 standard risk. He gets that trade. He adds a second position, takes the exit at the skin of the dragon, netting 3. He takes the PSAR flip. It loses 0.77. That's a potential short. If it does, it probably scratches. This entry here, maybe it's a bar late. Maybe we can get a better entry here, but that's still pretty good. He scratches. I think the re-entry, he was waiting to see if it could break through the VWAP. I think what I like on this one is probably, any entry in that bar is going to be fine as it leaves the dragon or it approaches the VWAP. Any of those is going to be good. He gets a fractional gain. Now, this is one where I think you can actually think about being short here or here as a collapsing dragon. He gets the collapsing dragon here. I personally, I don't like that as a long. I like this as the short. And I understand cutting this quick, but when that does not even get to the dragon, you got to re-enter here instead of here. And then you get that nice trade. This is a nice stop and reverse. If you use the bottom of the, if you're using the bottom of the RL10, then this thing never gets stopped out, and you get that entire trade, and the PSAR is your guide all the way up. So I think we're getting a little too nervous in the service close to the lunchtime hour. So at the lunchtime hour, notice how tightly clustered this is in here. And I think you want to use the wider PSAR stop to let that thing start to unfold. The afternoon trade wasn't bad. This was, he ends up getting aligned with that, it gets aligned with that larger market trend, but it was a little too choppy. And when you exit here and wait for this to break out, you're losing a big part of that move. But still retained 1.8 for the day, and that's pretty good work on what was not a large directional day in EWW, but he was able to get on the right side of all the large moves such as they were. So that's pretty good work. I will take a look at the God dang it. Take a look at the daily reports now. So we're still teasing that all-time high up here. This is the 150. This is the 150-day look back, 150-day low, 150-day high. So we're really pushing that upper limit of all the look back, and this is failure to fail, and consolidation near that all-time high. So this is still looking pretty solid. Very low levels of volatility today. So that says a potentially good upside move this week. If you can start the week with not giving back a lot of ground. And again, if you take a look at the size of the daily ranges of the last 5 days, right? You had this kind of a day. You had last Thursday was huge. Friday was huge. Today was a very narrow range, the narrowest range of the last four. And then price finishing up kind of in the middle of that bar. So that sets this up as a little hinge, which can now come up and test that previous high. And if we break above 524, then we have a really nice week ahead of us. Conversely, the downside, I think you can't let your stop get any lower than the Bollinger Band mean, because we've had sideways chop, and you do not want to let it go below the Bollinger Band mean at about 516, 515. Then the 10-day low is pretty tight right here at 513. And if that collapses, the 30-day low is back here. That's your last place of solid support. And that would be the place where I really pick up a negative bias. So just trading bias inside here, but I'm really looking to see a test. Good chance of seeing a test and a explosion up tomorrow. Let's see, bullish normal, stabilized today, overbought longer term, above average shorter term. Still bullish markets. We're risk off conditions, so it's a fragile market, as we see in the volatility here. But again, if we get some favorable upside moves, you would expect to see that rising lows might lead to a nice upward move. So I'm open to that possibility. The fact that we've had 2 days without significant selling is crucial too. Now you start combining a bit of a pullback from last week plus a very narrow range. You're going to get a lot of auto framers because you have a lot of dojis, and that's very healthy for upside moves. That means that there's still considerable distance away from a 10-day high. So if the 10-day high for these symbols is up here, and you had a nice big sell-off, and today turned out to be a little bit of a doji day, that allows you to establish a tight stop and then a large multiple move back up to test the 10-day high. And then and only then do you concern yourself with the next leg up, which is a breakout above the previous 10-day high. So you see things like Home Depot, Great American Company, 6-1, Intel 6-1, Boeing 3.5-1, Procter and Gamble 5.5-1, United Health 10.5-1. So there's a lot of things shaping up nicely, as well as some 5DDs and Intel, Johnson & Johnson and Boeing. So this is a buyer's market and a framer's market, and the range compression today is coiling the spring, getting ready for tomorrow. Big swing move. To a lesser extent, that's also true in the ETFs, although you did a nice breakout here in Mexico, which is why I'm really in favor of that as my first choice for my non-US breakout plays. Love that as a trading vehicle. Healthcare, 7.6-1. Staples, 4.7-1. I think you got to like that. You got to like when the Russell small caps and mid caps are both setting up at better than 2-1. You got to respect that. And the Dow is the ultimate at 5-1 and finished in a doji today. The failure to fail today in the big US indexes, I take as a positive. And therefore, you're going to see a lot of auto framers, a lot of squeezes. The summer and the fall are ideally postured for the resumption trades tomorrow. And I just want you to notice that tech has really been lagging a lot. You got Microsoft in the fall, Intel and IBM in the winter, Cisco in the winter. All of those say that your techs are postured to start making some runs. You know, when the market's at an all-time high, but tech is in the winter, you have this kind of grinding US market and then a divergence of tech to the downside. So any recovery move in tech will become a leader that actually contributes to pushing the market higher. But then you have room for the tech to really gain because of the sell-off, which creates the buying opportunity. So I like the fact that the Qs are weak and the S&P tech is even worse. I see that as a buying opportunity in tech. So keep your powder dry and your risk measured and be ready to go with that. Yeah, so energy among the few that are outstanding. Again, you got Intel just getting murdered. Great American company. You got to believe that's becoming a value play. Apple, I hate the company, but the stock is starting to look attractive on a value basis. I like the resurgence here at Home Depot. And it long-term, a great company, has had an intermediate term sell-off, and the last 2 days have been really good. So I see that as a stealth value play. Get ready to make some money on that one. Mexico, Latin America, and emerging markets actually postured pretty well. Europe's in pretty good shape. So I think we're going to see some fireworks starting tomorrow. The coyote opportunist just licking his chops. Yeah, see, Jay asked me a question. What are these blue dots mean? These are like minor mood changes. So to me, the red lines are, I'm looking at turning points in the RL90. So this is where the RL90 rolled over and where it rolled back up. And you can see that when this rolls over from this red line, you get a downward cycle until the RL90 rolls up, and that's where the major theme change now becomes positive as the slope of the z-score of the 90 goes up. Well, if that's the case, what I'm looking at is the turning points now in the RL30's z-score. When it crosses, this is where the RL30 z-score crosses over the RL90 z-score outside of the Yellow River. So it's outside ±1. That's almost like you could think of that as an SSC. So that front runs the signal a little bit sooner than the confirmation of the red line. By the same token, when this rolled over, that was a warning that the long-term upward move was done. And now you can see this is actually kind of a sideways move as the 90 z-score decays. And then when the RL30 z-score decayed, this is where it came back into the bounds of normal in the yellow. So I treated that as confirmation of a downward move. And then you can see that we've gotten pure sideways right here. So I want you to look at the blue and the red vertical lines as moods or seasons where the RL z-scores are changing directions on their swings. That's what that means. Make sense? Okay, that's everything we got for today. We'll get this published and posted, and we will see you soon. Tomorrow night, we'll do the Creativity 202 per regularly scheduled. Took a week off and wasn't feeling well last Tuesday. Take good care, and we will see you soon.